Hello everyone. I would like to welcome you all for today's webinar on the topic of financial information when becoming a parent. This webinar is brought to you by Services Australia Financial Information Service. My name is Nadisha. I will be one of your presenters today along with my colleague Phil. Before we start off with this presentation, I would like to acknowledge the traditional custodians of the various land we all live on. I am coming to you from the lands of Nam, also known as Melbourne, home of Wurundjeri and Bunurong people of the Kulin Nation. I would like to extend my respect to all elders past and present of all Aboriginal and Torres Strait Islander nations. Just a bit of housekeeping. If you're attending our webinar as a live event, there is a question and answer section with a speech bubble onto your top right-hand corner of this webinar. You can pop your question on that section. To protect your privacy, we would like you to ask your question only using your first name or anonymously. We have moderators who are ready to answer your questions. Feel free to ask your questions. For those who are watching this webinar on YouTube after the event, you can find all the links to this webinar on our webinar summary section. Services Australia provides the financial information service called FIS. Financial Information Service officers can provide information relating to financial literacy and capability, understanding superannuation, understanding your investment options and choices, planning for your retirement, and accommodation options, such as moving to an aged care, lifestyle or retirement villages, granny flat option, selling your home and downsizer options. FIS provides free, independent and confidential information and education to help you understand your financial options. It's information, not advice. FIS can talk to you about all the areas we've covered in this presentation and help you understand how they work with your individual circumstances. Access us online or call us on 132 300. Say Financial Information Service when we ask why you are calling. As today's topics, I will be covering parenting payment and services and income and assets. My colleague Phil will be covering superannuation, protecting your assets and our online services. We hope this financial information will be useful for you to make better financial decisions now and into the future. The information in this webinar is a guide only and accurate as of today's date, which is 12th of February 2026 and is subject to change. Refer to servicesaustralia.gov.au for further information. This information is a property of Commonwealth Australia and copyright reserved, therefore cannot be reproduced or photographed. Parental leave pay is a payment designed to help eligible working parents to take time off to care for a newborn or recently adopted child. To get this payment, you must be caring for a newborn or recently adopted child, have met the income test, not be working on your parental leave pay dates, have met the work test. Work test is that you need to have worked for about both 10 of the 13 months before the birth or adoption of your child, and a minimum of 330 hours around 1 day a week within that 10 months period. Meet the residency rules and have registered or applied to register your child's birth with your state or territory birth registry. Parental leave pay is a flexible payment that can be shared between parents. You can take your parental leave pay days as a single block, multiple smaller blocks, single days or smaller blocks combined with single days. To get parental leave pay, you must be on leave or not working. If you work for more than 1 hour, we consider this work. Let's look at family tax benefit. Family tax benefit, also known as FTB. FTB is a two-part payment that helps with the cost of raising children. This payment can be paid fortnightly or annually. To get this payment, you must have a dependent child or full-time secondary student aged 16 to 19 who isn't getting a pension, payment or benefit like youth allowance. You must care for the child for at least 35% of the time and meet an income test. What is Family Tax Benefit Part A? This paid for each FTB child in your care. This payment also can include additional components depending on the family's circumstances, such as a large family supplement, multiple birth allowance, newborn supplement and rent assistance. What is Family Tax Benefit Part B? This provides extra assistance to single parent, non-parent carers, including grandparent carers, and couples with one main income and is paid per family based on the age of the youngest child. What is Single Income Family Supplement? This paid after the end of the financial year. Single Income Family Supplement is not payable to new recipients from 1st of July 2017. However, existing recipient may be eligible if they meet the grandfathering provisions. We use your adjusted taxable income to decide if you can get FTB. You must meet certain residence rules to get FTB Part A and Part B. If you can't get FTB, you may be eligible to get other payments. Childcare subsidy helps with the cost of approved childcare. Income test, work test, and residence rule will be assessed to determine the payment eligibility and amount to be paid. This paid directly to your childcare services to reduce the fees that you pay. If you are eligible for childcare subsidy, the amount you can get depends on your family's income, the type of childcare you use, the age and number of children you have in care, the hours of paid or unpaid work, study, training, or other recognized activities that you and your partner do, or if you have an Aboriginal or Torres Strait Islander child in your care. Additional childcare subsidy may also be available for some families, including grandparents and great-grandparents who are primary carers, families moving from an income support payment to work, those experiencing temporary financial hardship, and families caring for a child who is vulnerable or at risk. Let's move on to information and assessment on child support. Child support can be payments or payment arrangements made between separated parents to help with the cost of raising children. In some situations, it may be paid by one or both parents to another person who is looking after their children. We call this person a non-parent carer. This could be a grandparent, legal guardian, or other family member. Our services are for both parent and non-parent carers. We can help you choose, manage, and apply for child support. There are two agreed types of child support: a child support assessment and self-managed child support. If you choose not to self-manage your child support, you can apply for a child support assessment. We'll tell you and the other parent who needs to pay child support and how much this will be. We can also collect and transfer the child support payments. Self-management means you and the other person manage your child support payments on your own. If you self-manage, you can only get the base rate of Family Tax Benefit Part A, which is a lower amount. If you self-manage, you won't have to apply for a child support assessment. You'll just need us to tell that you have chosen to self-manage. Once you have a child support assessment, you may decide you also need a child support agreement. You can make a formal child support agreement between both parents that can cover cash payments, non-cash payments, such as health insurance or school fees, or a combination of cash payments and non-cash items. Once you have decided what your child support arrangement will be, you'll need to show how to transfer these payments. There are different ways to pay or receive child support. This can be via Child Support Collect, Private Collect, or Self-Manage. Please refer to our website for more information. Parenting payment. Current maximum rate of parenting payment single and parenting payment partnered has been shown above. These rates are indexed twice a year, in March and September. This is a good time to revisit your current circumstances and advise us accordingly for a possible rate adjustment if applicable. It is important to highlight that many customers will not receive the maximum rate of payment. Majority of our customers receive a partial payment due to their combined or individual income and asset limits. Both parenting payment single and partnered are income support payments for primary carers of young children, but they differ in rates, income and asset testing, and classification. Parenting payment single is paid at a higher rate with a pensioner concession card, where a parenting payment partnered is paid at a lower rate equivalent to job seeker, often with a healthcare card. Let's move on to types of assets. We looked at the type and value of any assets you own in and outside of Australia. The value of a person's or couple's assets are used to determine the rate of payment under the asset test. Household contents and personal effects, motor vehicles, real estate, certain gifts, loans, and your financial assets, such as savings, bonds, investment, shares, superannuation, to be included in this assessment. We will use current market value for motor vehicles, household contents, and real estate. And current value or bank balance will be considered for financial investment, such as bank balances, bonds, superannuation in accumulation, and income streams. We do not include some assets when calculating your total assets. Your principal home and surrounding land up to 2 hectares will be an exempt asset. We will allow 12 months exemption on your home if you were temporarily absent and intend to return home, and 24 months exemption on entering into a care situation. Superannuation is not an assessable asset while in the accumulation phase and under the age pension age. Some other exempt assets include amounts paid for aged care accommodation as refundable accommodation deposit, funeral bonds, and concessional assets limit for special disability trusts. Let's look at parenting payment asset threshold and total value of your assets against these limits. For a single customer homeowner, asset threshold is $321,500. Non-homeowner is $579,500. For a couple, homeowner asset threshold is $481,500 and non-homeowner is $739,500. Your payment will cancel when your assets are more than the above mentioned limits. Let's look at how Services Australia assess the income. Gross earnings from your employment, including any salary sacrifice amount, to be included in this income assessment. Farm or business income uses the net amount after allowable deductions, as does rental income from real estate. Foreign pension payment, any sort of overseas income, to be included in this assessment. Income streams such as defined benefit superannuation income, market-linked pension, grandfathered, account-based income streams and annuities, and trust distributions. The income test for a single parent payment measures gross fortnightly income to determine eligibility for this payment. What is income-free area? In this income-free area, you can earn up to $224.60 per fortnight with one child before your payment is reduced. For every dollar earned over this threshold, your payment reduces by 40 cents. If you earn over $2,841.35 per fortnight, you will not receive a payment. The cutoff point increases by $24.60 per child if you have more than one child. The cutoff income is higher if a parent in payment single customer is over the age pension age. The income test for parent in payment access the combined gross fortnightly income of both you and your partner from all sources. Services Australia uses gross income for both partners. To receive a maximum payment, the recipient's income must be no more than $150 per fortnight, and the partner's income must be no more than $1,392 per fortnight. Recipient's income reduces the rate by 50 cents for each dollar between $150 and $256, and by 60 cents for each dollar above $256 per fortnight. Partner's income up to $1,392 per fortnight has no effect. Income over this amount reduces the rate by 60 cents for each extra dollar. If your partner's income exceeds $2,481.50 per fortnight, you may not qualify for a payment. Different limits apply if the partner receives youth allowance or study payment. For maximum payment, the couple's combined income must be no more than $300 per fortnight. If couple's combined income reduces the rate by 25 cents for each dollar between $300 and $512, and by 30 cents for each dollar above $512 per fortnight. For a part payment, the couple's combined income must be less than $2,783.34 per fortnight. If your combined income per fortnight is over $2,783.34, then you will not get this payment. As presented in my previous slides, we discussed total value of your assets and income. Now we are going to identify which payment rate are you eligible for. Your income tested rate is compared to your asset tested rate. You're paid according to which test pay you the lower rate. In some circumstances, customers may be eligible for a part payment rate from one test and not from the other test. That means you will not get a payment as we will be using the lower rate. This can change based on your circumstances. Let me explain some valuable information about concession cards, eligibility, and benefits. Concession cards assist people receiving income support, lower income earners, and their dependent to access concessional rate pharmaceutical and other medical services funded by the Australian government, such as cheaper medicine under Pharmaceutical Benefit Scheme, known as PBS. Discounts to redirect your mail through Australia Post. Your state or territory government and local council may offer you more. They may lower your utility bills, property and water rates, public transport fare, motor vehicle registration, travel or train fares. Our pension card is a light blue card, and pensioners automatically receive this card with your pension payment. Low-income healthcare card automatically issues to benefit payments such as job seeker and parent in payment. There are separate state government seniors cards available to eligible customers. Let's explore assessment or eligibility criteria for this low-income healthcare concession card. A low-income healthcare card can be claimed by satisfying an income test based over last 8 weeks and residency requirements. Redundancy payments are apportioned over a period of 12 months from the date they are paid for customers. This will be included in assessment of low-income healthcare card income test. You must verify your income using payslips, bank statements, and any other financials. Main benefits of this card is low-cost prescription and bulk billing. Please refer to Services Australia website, Low Income Healthcare Card Income Limits, for more information. We have gone through a lot of information in relation to payments, eligibility and assessment. Payment and Service Finder tool is a handy online tool to use and see what payments and services you may be eligible for. The Payment Finder will ask you several questions about your circumstances. It will then suggest payments for you to explore further. The Service Finder is a way for you to learn more about government and community organisation support in your state or territory. Now that you're a parent, it is important to discuss Medicare and any Medicare health payments that may apply to you. There are currently almost 1 million individuals with Medicare benefits waiting to be paid because their details are not recorded on our update or updated in our system. If your information is not correctly captured on our records, it may delay any benefits or reimbursements you're entitled to receive. We encourage you to ensure your bank details are accurate and up to date so that any outstanding payments can be processed without unnecessary delays. You can check or update your bank details online. You can also update your bank details by calling Medicare on 132-011 or visiting a customer service centre. You can get more information by visiting www.servicesaustralia.gov.au, Getting Medicare Benefits. Now I will hand over to Phil to discuss important information about superannuation, insurance, and other online services. Thank you.
Thank you, Nadisha. Becoming a parent is a great time to look at superannuation and how you can make it work best for you and your family's future. Superannuation is money that's put aside and saved whilst we are working to help fund our retirement. Your employer must pay a minimum of 12% of your gross salary into your superannuation fund. You can also make contributions. Whilst your super fund invests in a range of assets of your choosing to grow your balance. The choices you make today can help shape the lifestyle options that you and your family will have in your later years. Incentives encouraging us to invest in superannuation include superannuation taxation concessions. This means that for most of us, we would pay less tax on our superannuation contributions and its investment earnings than we would on our wages or investments held outside of the superannuation environment. And when assessing Centrelink payments, superannuation is exempt from the income and asset assessment when you are under age pension age and your superannuation is in the accumulation phase. There is a trade-off that you generally can't access superannuation until retirement or when a condition of release has been met. Superannuation is your money. As such, it is important to keep up to date with any legislative changes, any insurance premiums paid for, and your investment choices. The Money Smart website is designed to help Australians take control of their money with free tools, tips, and guidance. It's a fantastic resource to help you and your family research and make informed decisions about your finances. The Australian Taxation Office website also has current information to keep you informed. A critical task is checking your fund's annual statement. With this, you can make sure that you have received your employee contributions, as well as identifying all the fees and deductions. And importantly, also look at your investment choices and review this over time, especially as we get closer to retirement or our financial goals change. So let's look into some more detail on how you can grow your superannuation, which will then allow for greater lifestyle choices in retirement. Anyone under the age of 75 can contribute to a superannuation fund. And if you don't have a pre-existing super fund, you can simply open one. It's a good idea to research several funds before choosing one. Once you turn 75, superannuation contributions are limited to mandated employee contributions, also known as the superannuation guarantee, and under the downsizer provisions, which is available when you are aged 55 or over and sell your main residence that you own for 10 years or more. Superannuation contributions are made up of either concessional or non-concessional contributions. Concessional superannuation contributions are pre-tax payments into your superannuation fund. This includes the employer's 12% superannuation guarantee, salary sacrifice contributions, and personal contributions that you are making and claiming back as a tax deduction. Whilst a non-concessional superannuation contribution is a payment that you put into your superannuation fund from your savings or from income that you have already paid tax on. They are not taxed when they are received by your superannuation fund. Both concessional and non-concessional superannuation contributions have limits on what can be contributed each financial year. The concessional contribution limit, which are the pre-tax contributions, is $30,000 per financial year. This can be higher if you're accessing the carry forward rule, which allows you to make additional catch-up concessional contributions if you have some unused cap amounts from the previous 5 financial years and your balance is less than $500,000 as at June 30 of the previous financial year. Whilst the non-concessional contribution limit, which are the after-tax contributions, is $120,000 per financial year. This can also be higher if you're using the bring forward rule. The bring forward rule allows you to put up to $360,000 into superannuation in one financial year if you meet certain criteria. Further information regarding this is on the Money Smart or Australian Taxation Office website, through your superannuation fund, or you can discuss this with the Financial Information Service. Superannuation co-contribution is a government initiative designed to assist low and middle income earners in boosting their retirement savings through superannuation. Subject to your income, the government will contribute 50 cents for every dollar you contribute to superannuation as a non-concessional contribution, up to a maximum co-contribution of $500 if you have contributed $1,000 and your income is under $47,488. As your income increases, the maximum co-contribution reduces until you are not eligible for a co-contribution if your income is $62,488 or higher. In most cases, you can choose which superannuation fund that you would like your superannuation contributions to be paid into. You can use an existing fund, your employer's fund, or you can choose a totally different fund. If you don't choose a super fund, your employer must check with the Australian Taxation Office to see if you have an existing fund. If you don't have an existing fund and don't choose a fund, the employer will pay your super into a default super product chosen by them, known as a My Super product. So where do we start when choosing a fund? Let's consider a bit of a checklist. Cost. All super funds charge fees. These are either a dollar amount, percentage, or both. Performance. When comparing the performance of super funds, it's a good idea to look at the performance over at least 5 years and compare like for like. For example, if you're considering a balanced option, only compare with other balanced options, and noting that past performance is not indicative of future performance. User-friendly. What does their website look like? How easy is it to speak to them over the phone? And insurance. The insurance options available should also influence your decision. To make this process easier, you can use the Your Super comparison tool on the Australian Taxation Office website or through your MyGov account. It displays My Super products, ranking them by fees and net returns. The Money Smart website also has information to help you. If you change jobs or you've had a few jobs, it might be worth checking your MyGov Australian Taxation Office online account. Here, you can view all your superannuation accounts and their balances. If you have multiple superannuation accounts, you can easily consolidate them online through your MyGov account. Some funds, such as some defined benefit funds, won't accept contributions after you've ceased work with that employer. When you're looking at choosing a new fund, you should consider the insurance options within the fund. This is especially important when you become a parent and have children who are financially dependent on you. Superannuation funds can purchase group cover insurance. It is also tax deductible for the fund. This can mean a lower premium for yourself than if you purchase this same insurance outside of your superannuation fund. If you are looking at swapping super funds, consider, do you have insurance in your current fund? And can you get the insurance that you need in your new prospective fund? Insurance can act as a financial safety net for you and your family to protect your earning capacity against unexpected and often costly events like accidents, illnesses, or impairment. Provide stability, peace of mind, and can help prevent financial issues by covering lost wages and/or medical costs. Superannuation funds typically have 3 types of insurance for members, and your needs should be reviewed as you move through different life stages, such as becoming a parent. Life cover. This is paid when you pass away to financially help those you leave behind, also known as a death benefit. It can be paid as a lump sum or an income stream. Total and permanent disability cover. This pays a benefit if you become seriously disabled and are unlikely to work again. Income protection. This pays you an income if you are temporarily unable to work due to illness or injury. It's generally capped at 2 years, 5 years, or up to a certain age. And if you haven't put any money into superannuation for 16 months or more, you need to check with your fund that you're still eligible for the insurance options. It's also a good idea to seek professional advice to ensure your individual needs are met. Some superannuation funds also have trauma insurance to financially help you and your family. This pays a lump sum amount if you suffer a critical illness or serious injury which may occur, such as cancer, a heart condition, or a stroke. Trauma insurance generally does not cover mental health conditions. What's covered under an insurance policy and medical definitions can be different between insurers. To understand exactly what's covered under all insurance policies, make sure you read the product disclosure statements. Everyone should consider, do I need insurance cover? And how much cover do I need? Life insurance is generally taken out if you have financial dependents or significant debt, so that those dependents who rely on your income will have money available to cover their living expenses, and to ensure that your family isn't burdened with debts such as a mortgage upon your passing. If you are looking at purchasing cover, firstly, check if you already hold life insurance through your superannuation fund. You can increase your level of cover through your super fund if you need to. You can also buy life cover from a financial advisor, an insurance broker, or an insurance company. It is important that you answer the questions honestly when applying for personal insurance, as providing misleading answers could lead to an insurer denying a future claim. Becoming a new parent is also a good time to consider private health insurance for you and your family. This can help you pay for your family's hospital and medical costs that are not covered by Medicare. In some cases, you can receive treatment sooner by electing to be treated as a private patient. Things to consider when looking into private health insurance include what is covered, how does it work, what are the costs and annual excesses, and do any government initiatives or surcharges affect your premium? When you are looking at house and car insurances, check with your provider for any discounts for payments in advance, paying via direct debit, or annual payments versus monthly payments. Bundling insurances, meaning getting multiple insurance policies with one provider, can sometimes be cheaper. Shop around and compare quotes. Some car insurance policies offer a discount if you use your vehicle less than average. Installing security, such as deadlocks and window locks, can reduce home insurance premiums. Choose your excess. Higher excess often means lower premiums. And check that you are not under or over insured. There are various ways to protect your assets apart from insurance. This could include burglar alarms, safes, storage units. Asset protection is an important part of the financial planning process. MoneySmart, the website I've often referred to, is an Australian government website. It can help you make confident financial decisions with free tools, tips, and calculators. Services Australia has a range of online tools and self-service options to assist you, including our apps and online accounts. The MyGov app allows you to access government services in one place. You can do most of your Centrelink business using Centrelink online accounts or the Express Pass Centrelink mobile app. Becoming a parent can result in us having less time for our administration tasks. As such, using our digital services means you're first in line and you don't need to wait on a phone call or in an office. Services Australia continue to develop and refine our products and services, allowing people like yourselves to manage your own affairs via an easy-to-use digital channel. Using our self-service options can result in you completing your business with us quicker and easier. A MyGov account lets you link a range of Australian government services with one username and password, including Centrelink, Medicare, and child support, as well as other government online services such as the Australian Taxation Office. And if you need help using MyGov, a MyGov digital assistant is available to help you. You can also authorise a person or organisation to act on your behalf with Services Australia. They can then ask questions, make updates, and receive your payments if this is your request. The type of arrangement you choose should depend on what you need. You can choose a nominee, a person permitted to inquire, or a person permitted to update. But having someone to help you doesn't stop you from asking us questions, giving us information, or accessing your details online. And when you stop needing their help, you must tell us to cancel this authorisation. Otherwise, it will stay in place. Online guides and videos are available to help you make the most of your online accounts and the MyGov mobile app. These include step-by-step instructions for many common self-service transactions that you can do in your online account. And the Financial Information Service is here to support you. We aim to help improve your financial literacy and capability, boost your financial confidence to assist you in making informed financial decisions. There are several free webinars on our website, like this one today, which cover many topics. You can locate these by simply typing webinars in the search box on the servicesaustralia.gov.au website. From here, you can also book into a live webinar, see what webinars are coming up, or watch a recorded webinar that may be of interest to you. There are several ways that you can access the Financial Information Service. We have the Financial Information Phone Service. You can call 132300 or your normal payment line number and then say Financial Information Service when asked why you are calling. This will direct your call to one of our Financial Information Service offices across Australia. If you have a more complex situation, we can look at booking you into a video chat appointment. You'll need to have your MyGov linked to your Centrelink account for this, or a face-to-face appointment in some of our service centres. We also attend a variety of local community events. We have a range of different specialised services to support you, including the multilingual phone service, for those who would like to access our services in their preferred language, the Indigenous Call Centre and Social Workers line, our aged care specialist offices who offer appointments to older Australians, their families or representatives, and assist with all your aged care information. Our grandparent, foster and kinship care advisors who give tailored help for all non-parent carers, farmers assistants, where we can provide information to farmers, such as eligibility for the Farm Household Allowance, and the Financial Information Service. On behalf of Nadisha, myself, and the entire webinar production team, thank you for taking the time in attending today's webinar. Becoming a parent is a special moment in our lives. I truly hope that you enjoy your experience. If you found today's session valuable, please spread the word to your family and friends. You can scroll through the Q&A window to see the published questions, answers, and helpful links. This recorded presentation will be available on YouTube in the next couple of days. And our handy links are saved in the summary section. Enjoy the rest of your day.